going through all my trades from 2024 live, seeing whether I should like increase the risk to reward or um, like I was actually seeing whether, for example, I should, if it goes immediately against it, should I just close? But I found that no, I shouldn't, because there's been many times where it's messed around, even came close, and then goes in the direction. So anyway, for this next day, it's on Euro, and it was another win, and it was on the 3rd of October, 2024. Okay. 3rd of October. Okay. I'm tempted to just remove all the drawings on this chart, to be honest. Yes, I'm going to. Actually, I probably shouldn't remove them, actually. Because I think I've got drawings on here from the past data. Anyway, so, the 3rd of October. No, can it be the 3rd? The 11th. Wait, actually, no, it is the 3rd. I've already done this. Pound. What one did I just do? So I just done. Oh my goodness, what on earth? Right, so I just done the 11th. Right. So yeah, we're up to here. The 22nd of October, Euro USD. Well, actually, this was probably just a randomly executed trade to like keep my account going. So yeah, we're on Euro USD again on the 29th. I actually remember this trade because I remember October, it was my best month, I'm pretty sure. Obviously, the June, I think, was my best month so far, which is good. This is the worst month of the year so far. Anyway, hopefully we'll turn around. Like, but possibly anyway. We'll see. But 29th of October, right? Euro USD. So. Right, so 29th of October, so you cycle through your looms, see if there's a time frame, drop down day. What do you know? There is. Now, relative to the consecutive bar push and play, you've got a complete opposing bar flip, like just kind of a standard bullish close right at the overextended region in both ways that a push can be overextended relative to the consecutive bar push. But like this wick rejection, like relative to the R10 push, and obviously we're trading relative to this immediate sort of region, it is likely that possibly sell intent exists down to about like this 50 region, which you would want to not be too particular with in terms of being lenient based on like the context of where or what region this most recent bar closed the way it did at. If I was being hindsight, I would be like, oh yeah, we expect the market to go here. Like, no way. You're looking to capitalize on what actual intent probably exists within the region of the close. But obviously, you're then backing this up with all other time frames. So, I would honestly even be lean to say about here. And then obviously, we could increase it if next step lower time frame support, possibly bearishness. Okay. So, oh wow, okay. So they do. Yeah, you could definitely go 950. Yeah, definitely, 100%. Oh, well, look at this. So this is completely different, and also relative to the three. Yeah, this bar will close on 29th. So relative to the 4 and 3 day recent bar close, it's like to go here. So then, and then the 2 days slanted for here. and I would also not be too lenient with this because of the potential bearishness that could take hold. So I'd look at this, I'd be like, depending on how the daily looks. Okay, so this is the most recent daily close. Well, first of all, I would then minimize this to 250, definitely 100,000,000%, based on this daily being primarily slanted lower. I would then also just keep this objective the way it is, and then also then mark up the daily, and like the range of from the close to what region certain intent is probably going to exist with regard to what momentum's likely to follow through within that next bar, based on like the recent bar close, where Rick rejecting is likely to have a reaction at least to down here, aka what sort of intent traders are likely going to have to interact with the underlying product at the region the market's at. Then anyway, the 12-hour would be just viewed through the lens of what consecutive operation play. It's likely to definitely go here. Then the 9-hour, this is going to be interesting, I feel. Oh wow, okay, it's not that interesting. Now overall it is bearish, but you're probably going to have to see the market set up appropriately on this day based on this weak rejection to the downside and the possible case for bullishness. Then the 8-hour, okay, brilliant, definitely, yes, it looks really good to go here, and this weak rejection would need to be investigated a little bit more. So the 4-hour is also good for lower, but that slight wick rejection, you know, it could easily have a bit of a retracement, which will be, yeah, 100%. It definitely, like 100% case in terms of like, yeah, it could definitely have a retracement here. Does this bar close it here? Yeah, okay. So then the 2-hour, well, it's a bit iffy this actually, but you know, just based on the 3-hour, the 9, yeah, you would just want to see the market set up appropriately, definitely on this day. So then how we would look to see the market set up appropriately is, you know, well, first of all, you've got this fib. It just looks shit. I would then just say, yeah, you would just want to see the market push to about here, yeah, and see a nice 1-hour close. So do we get that? Yes, we do. So then you'd be dropping down as of 9. This fib, it just looks a bit shit, and you know, the 9-hour, like if we just go back to the 9-hour, obviously we've got that potential bullish case for the 2-day. You know, there's quite a nice wick rejection here, and then that's obviously reinforced with the 3-hour. Yeah, you wouldn't want to have that little tight fib pull on this day. It's not like it's slight bearishness, sorry, of slight opposing signs. You would definitely want to see the market push to here, 100%. And then anyway, you then drop down as of 9, and then you obviously get the ISLQS. Okay, yeah, this is fine. So then you drop down as of 9 here. See here, what the, hang on. Yeah, you're dropping down as of 9. Obviously my sessions are messed up because of this weird time change thing. And then this is absolutely beautiful. Like, you know, you're reacting from the probable push 2 point relative to the 2-day, which act as support and resistance, I've found. You know, and you just get such a nice bar close that you've already begun to wick reject. At the consecutive bar push to the upside, you're overextended in both ways, and then, you know, you get an opposing bar flip, strong close right at the slows. It's likely to just have follow through downside. But obviously we don't trade based on that. We trade relative to seeing the market set up appropriately, and then ISLQS, and then SABC in context of what consecutive bar push is likely in play. Now, this is going to be a good case. So what you do is you mark up the higher hand, which is here, and then you go to the whole price digit that is like next there. So it's 10 pips. This is way too much based on this price action. Then you mark up this amount, then you go to the price action to the left, and then you see if there's any zones, which as you can see, there's this zone right here, and that the market could reach up into. So I would just kind of look at what half is, and it comes in at about here. Yeah, it comes in at about here. And then anyway, this is quite a big stop, isn't it? So then what do? We do the daily probable push to, well, to be honest, like we just would mark out 2R, and then yeah. So then what I would do is I'd look at the 12R push 2 point in this case. Like you want to have a push 2 point that resides like at a probable like point. So it's like this, so if you looked at this, right? So I'll just draw the line just so I can, and obviously I color code it with like whatever this color is, and this so comes up. You got slight wick rejections here, and then it comes up at opposing bar flip, and it's likely to come to about here. Now this is also in the context of all the other time frames likely to even push to from this region of prices down to here. So I think that's going a bit unjust, you know, in terms of like being a bit unfair to yourself, you know, when there's such a bearishness case. You then look at what this looks like in the context of the 3-day. Okay, what about the daily? Yeah, 12 hour. Yes, 9. What does it look like in the context of the 9 hour? It does look okay. What does it look like in the context of the 8? Looks fine, to be honest. And then basically what we would then do, oh wow, okay, I see that it already comes in even more than 2R. So then in this case we'd probably be just looking to target 2R. Now the reason why this 1 hour close was fine is because look at it, like it's a proportionate wick rejection. It's a nice snappy wick rejection, bam, and then look for an ISLQS. It's already happened, and look for an SABC. So here we see that it's likely to push to at least here. Now this is brilliant because it's even more than 2R. So then what in this case we would do is we'd just target 2R, you know, and happy days. You know what I mean? It's like brilliant. So like this is maximizing this approach basically, and this is what I think we're gonna have to do if we want to exist. So yeah, we'll see if I've got any recent trades marked up, and we can just see what happened with them. So I think I should. Oops. Let's have a look. So obviously this was a loss. Maybe if we turn the view app thing off because the trades are blue. So that was a loss. This was a win. I don't know what. Some of these trades, by the way, are like not actual trades. So this is a bit hard actually. I mean, here did it go to? I don't even know like if this was I'll be able to usually remember. So this was a standard strategy 1, and here look at what 2R is. This would have probably been actually okay to use 2R on. This wasn't any trade. I cannot remember what this was. I cannot remember if it was a standard strategy trade. I should have them just marked up. Oh, June. Maybe it was on the other. And then we're going to go and sit in the sun because then we'll go an hour in the sun. And then obviously we start at 1 on one of the days that we're in already. So yesterday's Euro trade was actually invalid. And this obviously isn't standard strategy. Okay, I think I remember this. And some days you might even just genuinely have a 1-to-1 risk to reward. So it's like a dynamic risk to reward, right? Yeah, I think this was a standard strategy trade. And you see, you would have got 2R, but probably in this case, you would have had a 9R push 2 point around somewhere here. So here, I cannot even remember really what this was, but what did it go to? 1 point. didn't even go there. And it's like the thing is as well, you probably might take a few more losses, right? But like overall, you'll come out on top. So I can't remember what this was, but as you can see, 2-0. And I don't know if I've got anything else marked up. But anyway, that's it.